What's up, everyone? Welcome back. It's been a while since I made a video, but this is a very, very important video because we're coming up to the end of the year. Might be a little late with this video, but better late than never. And this is very, very important, especially for scalpers and day traders. And that is avoiding the wash sale rule coming into the new year. So it's very important that we're doing our taxes correctly so the tax man doesn't come after us through paying too little on our taxes. It's very, very important that we have everything correct. And so what I want to do in this video is to remind you of the wash sale rule. If you sell a security and repurchase the same or similar security within 30 days, the loss will be disallowed and added to the cost basis to your next position. So it's very, very important in the last month of the year, starting in December, that we are tracking the stocks that we're trading this month because within 30 days of December 2nd, you are now in the new year. So if you're trading the same stock within 30 days that you traded, the loss will be deferred till the next year. So that's why it's important that we're tracking these stocks that we've been trading. You can see here that every single day I'm logging the stocks that I trade on the day, and essentially I do not want to trade these same stocks between within 30 days, but after the new year, just to avoid deferring those losses to the next tax year, because I do want to get those tax benefits, or I do want to take those losses in the current year. I don't want to defer my losses and pay more in taxes this year than what I actually made day trading. So that's why I'm keeping track of all the stocks that I've traded. And within 30 days, but after the new year, I do not want to be trading these specific tickers. So I have it all listed. So on the 2nd of December, I do not want to be trading any of these names within 30 days, but after the new year. So that puts it between the 1st and the 2nd of the year. And then the next day and the 3rd, you don't want to trade those tickers between the 1st and the 3rd of the new year. And the 4th, between the 1st and the 4th of the new year, and so on and so on, all the way up until December. The last day is tomorrow. So last day is December 27th. So in the new year, I want to be reviewing this document. I'll be reviewing this document to remind myself which stocks I should not trade unless I'm willing to defer those losses that I took on that specific ticker to the next year. So a lot of traders are confused about this. I know of some traders that are even taking the entire month off of December, which absolutely is not necessary to avoid the wash sale rule. All you got to do is just keep track of the tickers that you're trading on the month, and just make sure you don't trade those same tickers during 2025 within 30 days that you've traded it. So this is my little cheat sheet, my little document that I use to keep track of all the stocks I trade every single day for the last month of the year. And the reason why it's only really important for day traders in the last month of the year is because we're not holding long term. So even if you had a wash sale, let's say in July, let's say you buy a Tesla on July 1st, you sell it on July 2nd, and you buy it back on July 15th, but you're holding that stock, Tesla, you don't sell it again until the next year. Say you sell it on January 2nd of the next year. That's still considered a wash sale, and you won't be able to take that loss that you purchased the first time, which we said was July 1st or something, I think. July 1st. So you won't be able to take that loss until the next year because you didn't sell that second trade until the following year. And since it was within 30 days, it will get deferred until you sell that position. So since we're day traders, you don't have to worry about that prior to December 1st because it's outside that 30-day window. 30 days after, in November, 30 days is still in the same year. So even if we trade within the same year, it won't get deferred because we're all cash by the end of the day. It only really comes into effect if you're holding, if you're holding it to the following year, um, which is why for December is very important because within 30 days it will be the next year. So this could be helpful for you. Hopefully you got some value out of this. Please make sure you drop that like button on the way out. Subscribe if you're new. Check out the links down in the description. And I'm looking forward to putting out some more content for you guys. Hopefully this came of value, and I'll catch you guys later. All right, peace.